Welcome to the FullyCrypto Podcast.
Hello, and welcome to another episode of the FullyCrypto Podcast, your home of quality cryptocurrency and blockchain news, reviews, opinion, and more. My name is Mark Hunter, and with me, as usual, is the man who loves a good dump. It's Alex Mears.
Good morning. How are you doing?
Very well, thank you. Very well. I'm feeling somewhat festive, actually, despite it still being November. I'm feeling in a festive mood.
Don't tell me you've done it.
Oh well, I'm terrified what you think I might have done.
Well, there's only one crime to do with festivities in November.
Well, let me say this, the tree isn't up, but what's been happening is that over the past week, my wife has been sort of subtly decorating parts of the house with Christmas things. So like a small Christmas tree here, bit of tinsel here, bit of holly down the banister. And so I've kind of subconsciously been noticing Christmas creeping in. And then today, I think that the pressure had built, that the lid came off today. And we've had like 4 trees have gone up. All the decorations are out. She's gone proper Christmas loopy. So, and I came into the podcast wing of our mansion today to record this, and I'm met with a lovely edifice of Happy Christmas and reindeer and these kind of fancy baubles that I certainly didn't buy. So yeah, everywhere I look now, it's Christmas. So I'm feeling Christmassy via osmosis, I think is the best way to put it.
Okay. Well, I mean, did you know where your Bitcoin money's gone? The missus spent it down the hardware store. Getting you new decorations.
Well, as we'll talk about, some of it's gone on decorations and some of it's gone down the pan, but which actually leads us quite nicely onto the topic of today, which, I mean, really, given the activity in the past kind of 2 or 3 days, there's only one thing that's worth discussing, and that is what I'm going to call the Bitcoin dip. And I know there's going to be a bit of a debate about this, but I am calling it a dip. I don't think of this as a crash. I don't think this is an implosion. I'm still calling this a dip, but I know you've got a different take on this.
Well, this is like saying MH370 simply dipped into the water. I mean, this is just a little bit more than a dip. It's going to make a big splash somewhere.
Watching this made me think back to 2017, and I don't recall exactly at the time, but I remember that there were these large corrections along the way, and maybe it depends whether you're in a bull market or a bear market, but between 2015 and 2017, in that bull run, we had like at least 8 double-digit corrections. 7 of them were either 30% or above. And it just kept going. It just like after every single like correction, it corrected back up again and then carried on higher right up to 20k.
Yeah.
And that's what makes me think that this isn't a crash, because if 30% or 40% is a crash, there's been 16%? This is nothing.
It's a baby crash.
Yeah.
It's had these little crashes along the way, though, hasn't it? It had one on the 18th, it had one on the 22nd, there was another one on the 24th, and they were all small, they were relative to the gains, but this one is just off the charts. This has taken us back down to the same price we were, on the 16th, so it's like 10 days ago. So it's just removed 10 days of gains.
I suppose that one of the reasons why this one is seen as such a big one is because it's happened. I mean, we've been expecting it for so long now. We've been talking on the podcast for the last 2 weeks. We were expecting a crash at 15, at 16. It just so happens to have come at this point where we're like $160 odd off the all-time high. Yeah. So I think this has got a bit more coverage and a bit more consideration because it's come after such a massive run. But this is my thinking. I get that it's a big dip. I get it's a big correction. And I know the idea of correction, a dip, and a crash is all subjective. But for me, a crash seems like really quite huge. A crash is something it's hard to recover from. I think maybe that's why I don't like it. I don't like the language, the use of the word crash, because crash suggests that there may not be a recovery. Mm-hmm. I mean, and in a bear market, a crash can be not terminal, but a crash can set you back for months. But this is not a crash because we are 5 months into a new bull market, and it will recover and it will come back up and it will go higher than it was. So that's why I think people are panicking about nothing.
I guess it really, really depends on who is in the market, who is pumping it. Because if you had a load of crypto noobs diving in, pushing it up, and that was all the FOMO pushing it, they're going to see, oh crap, I'm suddenly losing all my money. Let me sell it now in case this is 2017 all over again. I don't want to be stuck in this for another 2 years. I want to get out now. I'll just take a couple of grand loss rather than, being 10 grand down the drain. Let me get out now. So it could just exacerbate the issue and make it much worse. And it could dip even further. I think it really depends who it is that's in here and who it is that's selling.
I think there's a combination of factors. I think you're right. This is the first big correction that let's call them the PayPal brigade. This is the first big correction the PayPal brigade will have experienced. So you're absolutely right. Once it starts to roll over, then they're going to suddenly sell and they're going to be a bit panicky. I think the guys that know what they were doing, the guys that have been in this since it was at sort of 13,000 back in the beginning of September, when PayPal was making moves, when they were probably buying up their Bitcoin, to be fair, in preparation for their move. Mm-hmm. I think those guys, they were the first ones to really get on board with it, and they were kind of going long and pushing it up. And then you had the PayPal brigade came in about a few weeks ago to really kind of kick it a bit higher. Then when it didn't get to all-time highs, it had a bit of a double top. And I think that was when, I saw it on Twitter, there's a few guys who have been in the game for a long, long time. They were saying, this isn't looking right. We should have gone up by now. I think, I'm fully hedged now. Been in this since 10,000 or whatever. I'm fully hedged now. I'm out. And I think those guys were the first ones to sell. And I think the moment it started to drop down from like 19.5 down to say 18.5, suddenly you've got people that are long being liquidated. Yeah. And the more it goes down, the more that accelerates. And then you've got the PayPal brigade coming in to sell. It was something like $860 million was liquidated on Binance alone today.
Jesus.
So it's, as it usually is, it's that ripple effect, isn't it? You start with the guys that sell first are the ones that know what they're doing, the whales and the professionals, if you like. Yeah. Then you've got the liquidations that come in and knock it down. And then you've got the people that see it going down and panic sell. Yep. So it's that triple effect. And I don't know how many of the PayPal brigade is still holding at this point. I don't suspect it's too many. They're probably panicking.
No, exactly. And I think with the widespread media coverage of the 2017 crash after the push to the all-time high, I think a lot of people will sell faster this time as well. So it won't drag out for so many years. It'll just be a quick down and out.
When this sort of thing happened in early 2018, this was the start of the massive downward cycle, but luckily we are where we are, so it should kind of recover. But in terms of numbers, so what was the percentage drop it's been today?
Today, 12.55% down.
Okay.
That's $2,300.
Which sounds a lot. When you talk about it in the actual numbers, it sounds a lot, but the percentages is the really important thing, because if we go by let's say the Bitcoin standard correction of 30%. Like I said, between 2015 and 2017, there were 8 corrections. 7 were above 30, and one of those was 28%. So 30% seems to be kind of the average. When Bitcoin has spent time going in an upwards curve for weeks and weeks and weeks of green, 30% seems to be the average. If we do drop 30% from here, that takes us down to 14,000, which is amazing considering where we were only back in March.
Yeah.
So that's a completely feasible figure to come down to without anyone needing to panic.
Oh, exactly. I think it's a nice base point as well. It's a nice platform to build on. Sort of price-wise, it's not ridiculously cheap. It's not like, sub 10K where people are going to freak out. Mm-hmm. It's, it's still a reasonable price, like you say. So I think it's close enough to the all-time high as well for it to, still be attainable before January. I've been saying this for quite a few months now. Like, I really think we'll see maybe 19K sort of settle in January. I think it'll get there and it'll hang around. It'll find some sort of support there and it'll just sit there. That'll be its new springboard. I think, that's be when it's like, okay, we're not going to, if we correct, this is where we correct to. It becomes the new sort of strong support line.
So from then, when would you see the all-time highs being broken then? Soon after?
Yeah, sort of, I would say early to mid-February.
That's actually quite late considering. So you're talking a good few weeks staying at the same level without any big movement then.
Yeah, I've just got this feeling. I don't have them often. When I do, something happens. So I'm gonna stick with that. I might be absolutely wrong. I might be bonkers. It's just, I don't know. We're just shaping up, like the way. I mean, if you look at the last, what is it, like a month almost, we do get to a new higher, there's a dip, a correction. It then rebuilds back up. Then it trades flat for a couple of days.
Mm-hmm.
Then it either goes back up or it dips down again and then trades flat again. So I'm wagering on, a bit of a longer flat period. Perhaps I'm being a bit ambitious with, maybe like 2-3 weeks of flatness. Maybe it'll only be a couple of days. But I don't know. I think that, we're going to have a nice push up to 19K. Maybe a little bit beyond. Maybe just shy of 20. Then we'll go dip down to around, bottom end of 19. And then a nice little flat period for a couple of days.
I think you're right. There will be that period of kind of readjustment. I mean, timescales are obviously really hard to put on it, and it obviously depends where we eventually end up. Let's say we have another leg down to 14. You don't just have a rapid reascent. You could have all the buyers in the world, but it needs that time to slowly kind of gather momentum and gather steam. And I don't know. I mean, I don't know how much this psychological thing of an all-time high, I'm not sure how much that's going to play a part, because there was the amount of messing around, for want of a better word, the amount of fury that happened around 10,000. It was up, down, up, down, up, down, and then it finally broke through, and it went from 10 to 20 in double quick time. And I think once we do finally get over that, I have a feeling it's just going to kind of blast through, because there will have been a lot of pressure pent up from then. And especially if we've had this dip now, if we've got as high as we got to, and we've had the dip, be it 16%, 30%, whatever it's going to be, that has taken a lot of the pressure off, hasn't it? So I think when it gets back up to those levels again, there's not as much risk of it repeating.
Yeah, it'd be a lot safer. They've had their dip, they've had the correction. Everything's been sort of shaken out, so to say. And it should just be a nice bit of plain sailing. Straight up through.
Mm-hmm.
I mean, if you have a look at the 200 MA, it's still positive. It's still going up. Where, okay, fair enough. You got the 20 MA close that is starting to drop off, and the DEMA 9 as well is starting to look sad. But yeah, I think long term, it's still positive. It's still positive. The 200 MA is still, it's still very positive considering what's happened today.
This is the thing. I think so many people get caught up in the half hour or the hour or the 4 hour, and all you need to do really is, just look at the daily, look at the weekly, see how far we've come, and compare that correction with what we've seen so far. I think people kind of fail to do that. And given that we are talking about the PayPal brigade, I think it's important to kind of give a bit of advice from people that have been there. I would say, again, part of the piece that that came out yesterday, I said that people that haven't been through this, these 10%, 15%, they feel brutal. When you're watching them, when you're watching that red candle crash down, you're looking at your profits diminishing, especially if you are in the red with it. It can be brutal, and you can look at it and think it's never coming back. But the best thing to do, if you are in any doubt, I mean, unless you know where you're going to buy back in, unless you've got a solid plan of where to buy back in based on some sort of trading TA, just hold. Because in a bull market, just look back at 2015 to 2017. Every single mini crash, every single dip, every single correction was bought up until 20,000, and we are only 5 months into this bull run. We're not 2.5 years in like we were at 20K back then. So yeah, if you are thinking of selling, if you are holding now and thinking of selling, yes, it could go down another 2,000 or 3,000. It could go down another 10 to 15%. But unless you think, right, that's where I'm going to buy in based off this information, just hold it, because what will happen is you will sell too late and you'll buy back in too late. So you're going to make a loss, and you'll buy back in less Bitcoin than you had initially.
Exactly. You need to sell above what you bought and buy back in below your sell. if that makes sense.
Yeah, I mean that's the ideal. I think for people that have got a basic understanding of trading, that's what everyone's kind of aiming for in the most basic sense. But for most people out there, I wouldn't know what the percentages are, but I'm thinking like between 90 and 95% of people, they come into the space and they find crypto Twitter and everyone's a trader, everyone's a winner. They find the people they want to follow. They think they're gods because they got one or two calls right, and they base their calls on something like TA from these people. But they either get it wrong or they don't understand what they're doing, and they end up doing the opposite of that. They end up selling at the wrong point and buying at the wrong point because they are emotional people. They are not traders. They're not the cold-hearted trader you need to be. And so, I mean, I found this myself. I struck it lucky in 2017 a lot of the time. And since then, through the whole of the bear market and a lot of the bull market we've had so far, I've got it wrong. I should have a lot more than I've got because I tried to be too clever. And if I'd have just held from back in January, February, whatever, I would be doing so much better than I am now. And it's taught me to not to try and be too clever if you're not of that mindset.
Yeah, I think it's not just the mindset as well, it's the time. Because if you don't have the time to watch it, you don't have the time to set up all the orders and place them. If you don't have the time to do all that stuff, then you're going to miss key moments for you and your trading plan. So I think if you're a busy person, you haven't got 13, 14 hours a day to sit and watch the charts and plan and, sort of read how people are feeling in the market, then you're better off just buying, holding.
Yeah.
Especially right at the moment where swings are happening so fast. You need to be there. You need to know what's going on if you're going to be trading it.
In a bull market, you don't need to do anything. The money makes itself because you just buy when you can and hold it because you just do yourself out of your earnings. I mean, yeah, like I said, I learned the hard way, so I'm trying to not be too clever. If I can spot when I think something is really about to turn over, like I missed this rollover today, but I made a tiny bit back because I just about timed it right. But yeah, generally speaking, the amount of times that I have checked the price and thought, right, that's what I'm going to do. I've gone away to do some work. I've come back 3 hours later, 10 hours later, maybe a day later, and normally, if I'd have been at the screen at my desk, I would have sold and then mistimed the buyback. But what's happened in that meantime? It's gone back down. It's gone down and come back up again. And I'm like, thank God I missed that, because if I'd have been there, I would have reacted in the wrong way to that. And I know that about myself now. So even if you are just getting into it and you have the luxury of being able, if you're on lockdown, if you're on furlough and you're sitting watching the screens and you're waiting to act, that can be worse because you're reacting to things far too often. It's like the devil makes work for idle thumbs. If you are looking at it and you don't know what you're doing, you can overtrade so easily, and then you stress and fret about what you've done when you finally do pull the plug. Whereas if all you've got time for is one decision a week, one decision a day, it's in many ways much easier, especially in the bull market.
Yeah, no, that's very true. And I think if you don't have the time, you're not going to FOMO. You're going to forget about it. You're going to get busy and do something else. Do you know what I mean? Like, I sold at the 16.4, which is where we are right now, like just over a week ago. And I was regretting it the whole time. And it was really difficult not to FOMO and buy in. But you know what? Like, if you just wait, you'll always get cheaper again. So, like if it's not your ideal price, wait. It'll get there.
That comes with experience, because if you're new to this, if you just came in 2017 like I did, and then you just watch it go up and up and up, you think it's never coming down. And when it does drop 30%, you're like, wow, I didn't know it could do that. But then the next time it happens, yet again, you think it's not coming down, I'll buy here. You buy, it crashes, and you mess it up again.
Yeah, exactly.
In a bull market, you don't need to do much work, and the less work you do, the better. Just dollar cost average into it. When you can buy a bit, just buy a bit, and don't go over the top with it. Because we're talking, and this is the other thing as well, like I said, we're 5 months into this bull market. The last one was 2.5 years long. And if you're already panic selling and panic buying, a quarter in, a third into it, you're going to be a mess by the time it's up at 50,000, 100,000. You wouldn't know what you're doing.
Oh, exactly. You'll have no money left. You'll have probably no hair left. And what hair you do have will be grey.
You will have swapped your Bitcoin for regrets. So, yeah, that would be our advice, is that if you are new to this, if you are sitting watching the candles go green and suddenly go red and 10% down, 20% down, and you're still holding but you're worried about what to do, just take a look back at history. Go and look at the weekly charts between September 2015 and December 2017 and any other bull run before that. This is happening again. It's not coincidence.
Yeah.
And learn from that. Don't get shaken out when the drop comes, because the chances are, if you're new to this, you will mistime it and you will lose money.
Yeah, you'll lose a lot of money very quickly.
And in terms of where it goes, I mean, this is the exciting thing, and also the scary thing. When price is under its all-time high, you've got resistances, you've got supports to fall back to. But the moment it goes over 20, in Bitcoin's case, that's when kind of all bets are off, because yet again, no one has any idea where it's going to, especially if it's racing away and racing away. You can look at Fibonacci extensions, you can look at this and look at that, but no one's really got any idea of where it goes to. And so if you are sitting watching it go from 20 to 25 or whatever it might do, and you're hovering over the sell button, and it's only a year into the bull market, again, you're going to make a mistake, because a year is not long enough for a bull market. It's not over by that point.
Yeah.
There's no harm in taking profits, but I don't know, you've got to be absolutely sure when you sell that you know where you're going to buy back in if you are.
Yeah, you got to pick it very carefully.
The only thing we know pretty much for sure, unless something comes along and surprises us, is that it won't be as explosive as the last one. I mean, we were at just over 1,000 in May 2017, and we went 20x in a very short space of time.
Yeah.
We're not going to see that again. And every cycle that goes by, it's diminishing. I don't know why. I have something in my head, depending how long it lasts for. 50,000 is, I'm not going to say that's the top, but I think that could be that's the next, for me, is the next significant thing we're going to face, because 10 was huge, 20 is going to be huge because of the all-time high. And in terms of a psychological figure, maybe 25 potentially, but it's quite close to 20. 50 is massive, isn't it? 50 is a massive level, so it wouldn't surprise me if there is some kind of huge reaction at 50. But having said that, if you're talking a 2 or 3 year bear market, the last one was 2.5 years long, and this is going to be more gradual and more extended. So 3 years, 3.5 years isn't out of the question. And if you're talking in those levels, 100 isn't out of the question by that point, is it?
Oh no, exactly. I mean, if you do compare it to the last ones we've seen, the last bear markets followed by a bull like this, it's 100k is plausible. It's attainable.
Mm-hmm.
And I think that's a little bit scary. It's a little bit scary for me, and I think it's going to be very scary for many people, because you don't expect it when it's 16k. You think, okay, we're probably near the top, or maybe get 20, 25, just break a new all-time high, and that'll probably be it for me. But no, it's going to go on. It's going to go higher.
Yeah.
I mean, I think, like you say, 50k is easily achievable if this goes on for another year or so. Not even a year. If it goes on for another 6 to 9 months, we should get it by then. For sure.
There are those black swan events. The US Treasury want to put in some quite strict controls over privately owned crypto wallets. There's things like that. There's Tether potentially imploding. They've printed so many billions of dollars this year. Who knows what that's backed by.
Yeah.
So you do get these black swan events and these sort of things. But in a bull market, we've seen it in the past. The China's tried to ban Bitcoin twice in the last 2 bull runs, and it's recovered and gone on to new highs.
Yeah.
You can't kill it, and it will come back. But if nothing like that happens, then yeah, there's no reason why we couldn't see something like 30, 40, 50 next year, without doubt.
Yeah. Well, I think if the Treasury does manage to say, okay, we can't send money off exchanges anymore, I think you'll find, obviously they can't do it overnight. They can't say, right, tomorrow morning, no more. Even if they do say that, everybody will just take their money off the exchanges that are saying that.
Mm-hmm.
And you'll just have Bitcoin being Bitcoin again without those big exchanges, and you'll just have peer-to-peer transactions again.
Yeah.
Where the big Binance, Coinbase, whatnot, they'll just become obsolete because the regulations have just kind of destroyed it for them.
And I think as well, I very much doubt that players like PayPal would have got involved in this if there was the chance that the whole thing could implode on itself, a few months down the line. They're not silly.
Yeah, they're not going to do all the hard work, put their reputation on the line for something that could just bite them in the butt.
Yeah. This is probably the first proper, I'm still going to calling it a dip, the first proper Bitcoin dip since we really kind of got going. It's going to be interesting to see what the reaction is amongst the various people involved in the space now, because we are getting newcomers into the space. So let's see how they feel about things, where they start to buy back in.
Yeah.
But yeah, to sum up, I think if you are holding, just hold, because look back at history, see what bull markets do, use that as an example, and don't be cajoled into selling your Bitcoin just because other people are telling you to.
Yeah, don't listen to your wife.
Or never listen to your wife. That's a road to ruin anyway. But...
It is.
So yeah, I think it is a dip. It could go further, could go to 30%, who knows. But even if it does, buy more or hold would be our advice there.
Yeah, exactly. It'll pay you in the long run. It might be painful short term, but long term, you'll be a winner.
You'll be fine. You'll be fine. Thank you for coming to chat to me again. And
it's all right. Thanks for having me.
thank you once more. Thank you for tuning into the FullyCrypto podcast. Don't forget to like and subscribe on your platform of choice, and let us know what you think of us through our social media channels at FullyCrypto.
Unless you're a scammer, go away.
Oh, unless you're a scammer or you're going to say mean things, in which case we don't want to hear from you. We like constructive feedback, but no rude words, please. Unless we're brilliant.
And don't steal our content.
Yeah.
Don't scrape it and steal it. Please stop doing that.
And if the people who I've emailed about this are listening, please do something about that.
Yeah, I mean, we're trying to do something honest here to help you guys, and everyone's just trying to steal our stuff and, spam us. I mean, fair enough. Maybe that means we've got an audience and people are listening and reading. Maybe it's a good thing.
Imitation is the greatest form of flattery. That's right, isn't it?
It is, yeah. But I just feel bad for you guys, because you're the ones, who are being exposed to it. Those who really care about you won't ask for anything in return. Just like us. Mark and I, we got you.
As always, fullycrypto.com. Thank you once more for tuning in. Stay safe, buy the dip, and have a great weekend, everyone.
Ciao for now.